Joining us right now on the markets ahead of the opening bell is Sarat Sethi, who is managing partner in DCLA at DCLA, also a CNBC contributor. And Sarat, here we go. Markets are at new highs again. Saw the Dow close above 38,000 for the first time yesterday. When you start looking through what we've been hearing in earnings, what you anticipate from the economy, does this make sense? Do you think there's more room to run?
I think there is actually. If you look at it in just in the last few earnings, even today, when you look at what Procter & Gamble, United, and even a Delta that said things were better, but the stock sold off. I do think that we're into kind of what I would think of a soft landing, and stocks are reflecting that. The thing, Becky, that we need to see is earnings, and you're seeing that so far. And the question is, how much does the market believe those earnings are sustainable? Because on one side, you have the Fed saying, hey, we might, or the market saying we're going to have 5 or 6 cuts. And then the other side, you're saying we have a strong economy, and we just don't see inflation coming back to 2%. So I think that push-pull between, hey, earnings have to go up, cash flows have to go up, but then what do we do with interest rates?
Meaning that you're paying a lot more attention to the earnings prior to this than any thoughts of a rate cut or what comes down the road for the economy, because you feel like, okay, take the Fed out of the equation here?
Absolutely. And I think that's where it's going to be kind of sectors and stocks that you have to pick on. So think of, healthcare, energy, utilities that have all kind of come down because now the market's saying, hey, maybe rates don't come down. But if they have strong earnings or they just keep up with their earnings expectations, you could see multiples expand in those areas where you've actually seen multiple compression. I mean, you've seen expansion in tech and communication services, but I think that's where the next leg of the market could be up. Doesn't necessarily mean the S&P will go up, but it means the equal-weighted S&P could go up, or the selective other indexes could go up as well.
So what are you buying as a result?
So I like some of the utilities like AES. I think in healthcare, today you had J&J, Glaxo, energy. I think the big integrateds are cheap, such as Chevron and Exxon. And then select industrials and financials. I think, valuation is going to be really important. Not to say I don't own the Mag 7. I think you still have to be in there. It's just a question of how much do you want to own of those, especially with the expectations built in. They have to really have really good earnings and actually increase their expectations.
Okay. Sarat, thank you.